Good day everyone. So you've been watching my videos and you've decided it's finally time to start investing in the stock market. Well, you've got to watch through this video today because I'm going to pull out the top 5 mistakes that I see new investors make all the time. Over my 20 years or so watching the stock market, working in the stock market, I have seen these mistakes on repeat. I even saw them last week with some colleagues. Do not do this stuff, otherwise you will be poor and have terrible results in the stock market. Hi everybody, my name's Jeff. Welcome to my channel. I've recently started posting up some YouTube videos in the finance sector because I've been working for 20 years in finance and I've seen all sorts of things and gained loads of knowledge, and I want to hand that knowledge off to you. So if you want to learn more about investing in the financial markets, and subscribe to my channel, I've got a lot more videos coming, help you learn more about the financial markets. Also, this video and all of my videos are not financial advice. I am not a financial advisor. I do these videos for knowledge and educational purposes only and a little bit of entertainment. If you need a financial advisor, seek out a qualified professional who can help you with your investment decisions. This video is not financial advice. And when you invest in the stock market or pretty much anything else, be aware that your capital is at risk. Now let's get into the video. Alright, so my top 5 mistakes that new investors to the stock market ate. Starting in with number 5, not having an investment plan. I see this all the time. Many people are just getting into the stock market with nothing more than a dream of getting rich quick, and this is just not how it works. They haven't given any thought to what sort of results they're looking for, what time frames they're thinking about, what this money is going to be for. If it's for a deposit on a house, maybe it shouldn't even be in the stock market. So first thing you want to do is identify, what is my goal here? What is the plan that I want to put in place to get the outcome I need? Okay, and you do that at the beginning. I've mentioned this before, but if it's money that you might need in the next 5 years, it probably shouldn't be in the stock market anyways. But assuming all of that is covered, think about your investment plan. What is it I'm trying to achieve here? And most importantly, in what time frame am I looking to do it? Have an investment plan. Alright, so my number 4 mistake that I see new investors make all the time when they start up investing in the stock market, and that's buying cheap penny stocks. You would not believe how often I see this, but a lot of people just look at the cheap penny stocks and think, yeah, I could find a 10 bagger here. This stock could go 10x, dreaming of it being the next Apple, the next Microsoft, and the odds of that happening are absolutely tiny. It's really like buying lottery tickets when you buy these penny stocks. It's just how it is. I don't recommend that you start off buying in penny stocks. They can move 20, 30, 40, 50% in a day. The companies, are they even that good? And that's the most important thing, I think, when you invest in shares. Is this company a good company? Do not start your investment journey as a newbie to the stock market buying penny stocks. You will not make money overall, guaranteed. All right, my number 3 mistake that new stock investors make, and that is thinking short term only. That's right, chasing the news headline, chasing the hot stock, thinking about some stock that's going to go 2, 3, 4, 10 times over the next year, and thinking only on a short term basis. The stock market is not a get rich scheme. It is not. It's get rich slow. So you want to be thinking long term, not short term. Don't chase the headlines. Don't chase the stocks that are moving by X amount. The media will always drive this home, and it's going to play on your emotions, and you do not want to do this because you'll probably be buying at the worst possible time, and worse yet, the stock sells off, you're going to panic. Don't chase the headlines and think short term. All right, my number 2 mistake that I see new stock investors make all the time, I see it over and over again. It's so frustrating. Trying to time the market. Guess what? You can't do it. Nobody can do it. A really successful fund manager here in the UK by the name of Terry Smith, he runs a great fund, he's had really exceptional returns. I think he summed it up best. When it comes to timing the stock market, there are 2 types of people. 1, people that don't know how to time the stock market, and number 2, people who don't know that they cannot time the stock market. Do not fall into this trap thinking you can time it, you can sell, buy back later cheaper, all of this sort of stuff. You'll never work. So there have been some great research studies around timing the market, and if you've been out of the market in certain times and everything. Bank of America did one. They went back to 1930, look at the S&P 500. And if you missed the 10 best days in the market from 1930 on, your return would be 28%. That's right, only 28% going back to 1930. Horrific results. But if on the other hand you held steady through all the ups and downs from 1930, your returns would be 17,000%. Remember, these great days, the biggest days that you'll see the markets move, they tend to happen when the markets have sold off a lot. Think about COVID. There were some days where it moved around 9% up after, of course, it had sold off a lot. But if you come out of the market because the market's down and the headlines are scary, you're gonna miss the best days. Just stick in there, stay invested, and ideally, if you have money, cash on the sidelines, that's a great time to start adding it to the market. So remember, you cannot time the stock market. Save yourself the time, save yourself the headache. Don't do this. Don't think you can do it. You cannot. I assure you, you cannot. So don't bother doing it. Okay, the number one mistake I see new stock investors do, and I see this over and over and over again, and it's the worst one by far. This will destroy your stock market experience, unfortunately. If you do this, you might as well just give up. Panic selling when the market is down. This is the worst thing you can do. It'll destroy your returns entirely. When the market sells off, the media loves to get on board. There'll be all sorts of terrible, scary headlines, and sometimes there's an unbelievable amount of uncertainty. We certainly saw that in 2008 and 2009. It was a very scary time at that point. But guess what? One thing I've learned through the dot-com bust and the global financial crisis, COVID pandemic sell-off, the worst case scenario that the media always trounced out day after day, it never happened. And in all three of those cases, the market bounced back way quicker than you would have thought when you were seeing these headlines. So do not panic sell. You'll be coming out of the market at the worst possible time, and it creates another problem. When do you get back into the market? Again, you won't know because you can't time it. So stay invested. The way to get around this, number one, when the markets sell off, don't log in, don't look at it. Go do something else if it hurts. Just stay away from the market and don't bother. But there's a smarter way to play this one as well. This is what I do, and it took me a while to learn how to do it properly, but it certainly works for me and the returns have been great. You add more money to the market. That's right. You ignore the headlines. You ignore what everyone's saying at work and around you, how the stock market's awful. It's going to go down another 20%, another 50%, whatever. Ignore it all. The market's down 10, 20, 30, 40%. Start drip feeding money in. Some of the cash that you have in your portfolio, other cash in other bank accounts, whatever you're comfortable with, it's time to start putting money to work. And you're thinking long term, right? So now's the time to do it. Okay, so those are my top 5 mistakes that new investors make. How do you get around it? You ignore all of those. You just don't do them. And you put your investment plan, particularly if you're just starting off, on autopilot. I've said it many times on the channel. I'll probably repeat it over because I think it's that important. Think long term. Automatic transfers into your brokerage account. Start with index funds because that way you'll be heavily diversified, and just put it on autopilot and let the money go into the market month after month after month. Don't try and find the next penny stock. Don't try and pick the bottom or pick the top, any of this nonsense. And definitely don't panic sell, and stick to your plan. Get it defined of what you're trying to achieve. Get it on autopilot, and you'll avoid all of these mistakes. And trust me, your returns will be so much better than your colleagues, friends who are doing those mistakes I just mentioned. So that's my video on the top 5 mistakes that I see new investors make. If you like the video, why not give it a like? Share it with a friend. Trust me, if you've got other friends that are looking to get started up in the stock market, they have to avoid these 5 mistakes. So share the video with them. Subscribe to my channel if you want to hear more, because I got more videos coming, and leave me a comment. Tell me what you think, any other ideas or videos that you'd like to see, and I'll see you in the next one.